I think the poison has been TikTok and YouTube and, the people with, I made 1,000% return, or I made $1 million on my $5,000 trading account. And your first reaction should really be, no, you didn't. And your rationale for these kinds of things should be, are they just not telling the truth? And I'm like, yeah, they're not telling the truth. It's they're renting a car and they're filming a trading office in some house that's for sale, some house that's staged somewhere. You have to be a skeptical consumer, especially when there's no barrier to what somebody's putting in front of you.
Tell me more about what you're doing these days and what you're focused on in trading.
We've been trading the markets actively since 1996. So my wife and I have been full-time equities traders since the 90s. So the gist of what we're doing has always been the same. I wrote a bunch of books about trading. We're both PhDs. We're both researchers. We did a lot of research on the markets while we were in graduate school. And the foundation of what we did was all in statistical analysis. So we did a big multivariate analysis of covariance on New York Stock Exchange data. And then we built a trading model around that. And we've been trading that, for going on 30 years now. Probably added, NASDAQ was the last thing that we added to the mix. And that was 12 years ago. And the current focus is it's still on all those patterns. It's still on, we're order flow traders. We go through, we try to isolate order flow in the markets, figure out where things are happening, where things are likely going based on where the orders are piled up. And then, over the course of the day, it's just our job to go and pick off the liquidity. And, the primary focus of the thing is on the first hour of the day. So our big emphasis has always been, the 1 hour trader, trade the first hour. And then really the rest of the day should pretty much be something you can automate.
Which one came first? Was it trading or psychology?
So it was psychology. So psychology so we were both working on our PhDs, and I was working on an MBA and a PhD in economics and finance, and then the PhD was in organizational behavior and behavioral finance. And we were collecting the data. So the hope originally was we're going to finish school, PhDs, we're going to go out, we're going to work for McKinsey & Company or somebody and do, corporate culture stuff or mergers and acquisitions. And we were just sort of going to go that route. Well, while we were collecting all that data, I had a guy named Peter Drucker. He was a very well-known business consultant. He was a major professor of mine and on a committee. And he knew that we had started collecting the data on the exchanges and the data about trading, and that we were actually trading our own account. And he was a smart guy, right? And he just said, if you've got a business that's making money, then you'd be a fool to go work for somebody else and try to focus on consulting or something. Why don't you just keep doing what you're doing? So we graduated and never had a regular job. So we walked out the doors at Claremont, got our degrees, and focused on trading ever since. About 12 years ago, we decided to add some teaching, because we had always thought we'd be university professors or something at some point. And what we did instead was we do a lot of public speaking for the exchanges and for the trade shows that are around. And then we decided we're going to do this income trading boot camp thing where we teach like 20 people a year how to do everything that we're doing. And then we work with them for, one-on-one for a couple of years. And honestly, spend a lot of time navigating people's psychology. The market can be a terrible mirror to look into. It finds your flaws and brings them right out.
How did you learn trading? Did you have any mentors to kind of guide you, or did you learn all this by yourself?
Early on, the guys who I spoke with and who I learned to trade from were not people who were doing online trading or were doing investing. They were floor traders. So there were some really good influences, $2 brokers and guys who were specialists at the exchange, and people who worked that side of the market makers, the guys who are putting together order flow. And it was really just by getting a feel for what they were telling us that they were doing, that we then turned around and said, you know what, you can take all the statistical stuff that we did, take all this stuff that was able to be quantified, and turn it into effectively pattern recognition, where you're going through and you're looking at charts and finding. The first book I wrote was originally called A Multivariate Analysis of Covariance in the United States Equities Markets, and the publisher said, you know, how many copies of this thing you think your mother's going to buy, because nobody's buying that book. Nobody's buying a book with that title. So we renamed it, rebranded it Around the Horn, A Trader's Guide to Consistently Scoring in the Markets, took the statistics out of it, left the pattern-based stuff in. And to this day, you know, an expansion of range and volume pattern in there is called fast vol. An extension reversal is called infield fly. And as we develop those, you know, there's 12 patterns in that. The book's out of print now. I mean, it'll be back next year with a much heavier emphasis on psychology. But the patterns that are in that book are still the things that we trade today. I mean, markets are cyclical. We follow market cyclicality. We follow, you know, the natural markup, markdown, and you know, accumulation, distribution, all the stuff everybody knows. We're just following that and looking for the footprints of money as they move through the market, and then trying to figure out, you know, where are the big players likely to take a stake tomorrow based on what they did today. So based on today's price action, where do we think they're going to step back in and finish what they were doing, or just reassert order flow? And, you know, how can we capitalize on that? That's been our gig.
I'm sure you hear about people that they want only the patterns and setups. How do you deal with kind of showing them the psychology of things? Because, you know, that's the most important part. How do you get that across to them if they just want to see setups and kind of patterns and stuff in the book?
Famously, you're right. People will come to us and say, you know, if this thing makes money, and, you know, we have our blotters on the site and everything go back to 2006. So you can go through and look at every trade back to 2006. And they'll say, you know what, if it makes money, I can make it fit my psychology. And our first reaction is always to say, no, you can't. You're going to have to go and do some soul searching. Everybody thinks they want to gravitate toward one part of it. So a lot of people will like, for instance, the expansion of range and volume setups, or they'll like the you know, the reversal setup. So there's your contrarian thinking, there's your guy who likes momentum, and then, you know, we'll say different times of the day are very different in terms of trading. So, you know, we've got a guy right now who we've been working with for the better part of a year, who, it's the same pattern every day. He gets in, and at you know, 9:30 Eastern time, he's trading Tesla, and he's trading the order flow in Tesla, and he trades it really, really well. Like, he understands exactly. He'll look at the book map. He'll look at the level 2 screen. He looks at your time of sales, and he can piece together that puzzle pretty quickly. By 9:45, he's got $1,500, $2,000, $3,000 in his account that he just booked in profits. And, you know, we work together. So the alumni of this thing, we all trade together every day, and everybody knows already what John is what's gonna happen next is he's gonna say he's gonna turn off the computer at 10 a.m. Eastern, and then he's not. And then he's going to spend the rest of the day digging out of the hole that he puts himself in as he trades into these less liquid times of the morning. And, you know, he's just one example, but, you know, what we do with him is just address every day. It's just a matter of, you're going to, like, I'm not going to risk manage you. I'm not coming over and turning your computer off, but you need to get to the point that you understand your psychology is very fit for that first half hour. You're a guy who is able to look at that order flow, and he sees that fast tape, and he sees things that are moving. And I tell him, you're blessed, right? A lot of people would give their right arm to have a small account and be able to pull $1,000, $2,000 out of the market every morning and then leave and do something else. But his problem is he's addicted to this adrenaline. So he's he's a gambler. So we actually developed a pretty big personality inventory that your listeners can go and take a look at. And it's 100 questions, and by the time they're done, some people will say to us, "Oh, this is kind of what I expected to see," and other people will say, "You know what? I need a hug. I really this is this is awful, right? I'm a gambler. I'm neurotic. I'm looking right down this list of things, and effectively, I feel like it's telling me I shouldn't trade." And we say it's not saying that at all. It's saying you have to figure out what you should be trading and when you should be trading it, and what kinds of things you can do to temper your emotions so that you're not self-sabotaging. So it's all, everybody's different. I don't think it's one size fits all. So Julie and we have an all-day trading strategy. So we've got for each time of the day, and we teach everybody this. We make everybody learn the whole thing. And then we'll say to them, now listen, those strategies, they all produce for us because they match our psychology. We came up with every one of those strategies. What you need to do is find the thing in here that works for you, where you're comfortable, where you're not going to sit at the computer and be, a passive psychological failure every day. You're going to sit at the computer. You got the courage of your convictions, and you're able to say, you know what, 9:40 to 10 a.m. Eastern, that's my sweet spot. That's where I can trade. Or I like to trade when the market gets range bound, when things slow down a little bit. So I like to trade from 11:30 Eastern until 2:15, 2:30 Eastern time. Or I like trading into the close because then I can see where the markets have been made all day and I can figure out where the threshold levels are for order flow. But it's not the same for everybody. And I think that when you hear this statistic about how many people fail in the business of trading, I think it's mostly due to they're trying to pound a square peg into a round hole. They're trying to do something that's not psychologically suitable for them. And you're not going to grown-ups don't change that easy. Your psychology is not as adaptable as that's why people spend 25 years in therapy. But I'll guarantee you what everybody can do is find something at some point in the day that'll work for them, and then they're off to the races. You just have to be satisfied with, I don't need to work 6.5 hours just because the market's open. I need to work smart.
How do you make trading work for someone who has a non kind of trading friendly personality? Like they gamble, they tend to risk too much, they tend to like have bad habits. How do you make trading work for them?
It's some of this stuff is down to brass tacks where we'll tell people, there's cognitive behavioral therapy that you need to do for yourself so I've got another guy who had a very hard time not jumping into trades when he shouldn't, just because he was bored. And so what we did with him was we said, look, you've been through all the training, you know your stuff, you know exactly what you're supposed to do. Now let's set up a checklist and let's just do a fun little exercise, maybe fun, maybe not so fun, where you've got 2 jars on your desk, and the jar on the left is full of marbles and the jar on the right is empty. And what you're going to do is every time you're considering a trade, you're going to set it up, you're going to go through your checklist and you're going to tick the boxes, and you're going to make sure it meets all the criteria for the trading that you're trying to do. If you take that trade, great. Win, lose, draw, it doesn't matter. Your measure of your success is you planned the trade, you traded the plan, you did what you said you were going to do. That's your success. Winning is not about, did I make money today? Winning is about, did I do something that I can replicate tomorrow because I knew what I was supposed to do when I did it. If you didn't do that, if you didn't tick the boxes, if you took a trade because you saw something on the news and you thought, oh boy, the market's going to rip, I'm going to jump in, then even if you made money, you're moving one of the marbles from the full jar into the empty jar. And at the end of the day, you have to look at you're going to look at the 2 jars and you're going to make a decision here about, because the one on the right should be empty. You should always work your way through your logic. And so for him, he said, it was a very uncomfortable exercise. And, we do a lot of travel, vacations and things with the guys who have been through the boot camp with us. And, we stay very close with them. So we went up to Napa Valley and went to a winery and had the guys there. And so his wife comes up to us and she says, "You know what? When I get home from work, the first thing I do is go look in Joe's office and I see how many marbles there are in that other jar, because if that jar has more than one or two marbles in it, I know I'm not going to talk to him for a couple of hours." So it's that kind of thing. You just have to make people self-aware of what it is. I mean, journaling is great. It's just hard to journal during the day. So, Julie and my journal at this point is just the blotter of what did we, what were we looking to trade? What was the plan? What was the result? The guys, what we find is when they write their journal entries or they're journaling their trades, they tend to do it with the benefit of hindsight, and they tend to do it at the end of the day. And it's hard to sort of parse these things during the day. But the marbles in the jar, that's a good exercise. There's lots of things. The gamblers, the impulsive guys, we'll tell them flat out, you plan your next trade, and then after the trade's done, I want you to get up and stretch your legs and have a drink of water or go for a walk. We live on the island here, and in the morning, to this day, market's open for an hour. At the end of the hour, Julie and I take the real kind of Yorkshire Terrier, right? We take him out and we walk 3 miles around the island every day just to take a break from the open, because we know that if we had a really good open, then that psychology can really creep into the rest of your day. It can go, and because the reality is it doesn't make a difference if you made money in the first hour or not. If you're planning on trading again the rest of the day, market does not care how much you made or lost, or how much you would be willing to lose or earn going forward, right? The market is just about, okay, here's what happens next. So it's just about being present and being in the moment, I think.
Do you find that the human behavior changed since you started trading in 1996? Like now with more, I guess, low bar to entry, are there more people who are more impulsive or kind of have a different behavior than what it used to be?
I think the poison has been TikTok and YouTube, and the people with I made 1,000% return, or I made $1 million on my $5,000 trading account, and your first reaction should really be, no, you didn't. And your rationale for these kinds of things should be, if I let this into my thinking, then I'm gonna put myself in a position of feeling like I'm less of a trader if I'm not able to do that same result. So you never have a good metric then for what defines success. I have people all the time who are intelligent people, very intelligent people who are working with us, who spent a lot of money to do the training with us, who will say, well, it's great that you're able to generate an income and that we're able to generate an income doing this, but it's so hard to watch these guys and their Ferraris and Lamborghinis and airplanes and just, are they just not telling the truth? And I'm like, yeah, they're not telling the truth. It's they're renting a car and they're filming their a trading office in some house that's for sale, some house that's staged somewhere. You have to be a skeptical consumer, especially when there's no barrier to what somebody's putting in front of you.
You find like that changes expectations of people who go in the market, and then they try to expect these same results.
Yeah, and it's especially bad because a lot of people wind up in the penny stock space, which is it can be a big game of musical chairs, and God help you if you're the last one standing when the music stops. And the reality is, they still see it, right? They see this, oh my gosh, this thing, that's even worse, because then they're looking at the chart and, oh, look at this, yesterday this thing doubled, tripled, it went 10 times in price, and what if it does that again, and I'll just risk X and let's see if I hit one here. And the next thing they're stuck in trading halts, and they're it really damages the psychology. I think there's ways to learn to trade. You're not going to learn how to trade watching a YouTube video. You're not going to learn how to trade reading a book. You need a mentor, and you need somebody who who can show you what the market really is or what it's really about, and then show you how to get in front of the opportunity. That's the only thing somebody can show you how to do. I'm smart. My wife's smart. My traders are all smart, but what they all share in common is they know how to get in front of the opportunity, and then they know how to capitalize on it. So, let's talk about the 1 hour patterns, right? The first hour trading patterns. So probably our go-to patterns right at the open. We do a trade in Apple every day. So Apple happens to be a stock that, if it's trending in the pre-market and then it pulls back from a trend higher, so you got a trend move higher, pulls back down to a support and resistance level. You've got plenty of time before the market opens. We go back and validate it across a few days. We'll look at, was there support and resistance at the same level that it's pulling back to? And in the past, what was the reaction when it pulled back to that level? Did it always spike higher? Because what we're looking for there is a delta hedge. We're looking at, market makers are making money on the premium. So they're selling calls. Stock comes back to that level again. Looks like the stock's going to take off from that level. It has consistently for the past few days. When it comes back to that level, then when the buying reasserts itself, when you see buyers coming into the market, all of a sudden you've got market makers who are negative delta. They want to be delta neutral because they want to make their money on the premium. They don't want to lose money on the rising stock price. So what they do is they take in stock. And what we do is when it hits that support level, when it hits that threshold level again, right at the opening bell, first 5 minutes, 10 minutes, 15 minutes of the trading day, then we'll take in a bunch of Apple, buy the stock, and hold it up until we get to the next level of support and resistance that we saw on the charts from the previous days, from the pre-market session. That's our first target on it. Then we trail in behind it. And that's a position that we do nearly every day. So every day there's the opportunity at least to get info on these Apple trades. And that's our opening trade. Then 5 minutes into the session, we've got a big statistical model that goes through and looks at opening gaps. So what this one does is it'll take in all of the stocks in the S&P 500 that have reported earnings and are gapping. Usually earnings gaps are overblown. Earnings gaps are more than what is justified by the earnings announcement. So we're looking for something that has gapped 2 standard deviations of volatility added to the price. So 2 standard deviations of volatility added to yesterday's closing price, up or down. And then we're looking for a pattern like a 1, 2, 3 kind of a stair step thing to say, okay, now we're going to fade that move back into a mean reversion. So we're just looking for a move back down to average volatility. Where would the normal volatility of the stock suggest the stock should be trading this morning, just based on the normal amount of gaps that you can expect in the stock. That gets you into the 95% confidence interval of the mean. So when that trade comes up, it's a no-brainer. You've got a 95% probability price is going to move back toward the average. You don't know if it's going to close the gap. You don't really know what it's going to do outside of the fact it's going to move back toward the mean, and that's what we're capitalizing on. So that trade, that runs for the first half hour of the market. And then at the same time, what we've got going on is based on today's data, I'll set up a group of volatility bands for tomorrow's trading. So I'll go through and kind of now that, we share with our guys that goes through and you're looking at where was the push in the market today, from what level to what level. You're isolating. It's actually doing it's called a hierarchical cluster analysis. Sounds more intense than it really is. It's just a thing that goes through and says, here's where volume was by price. Volume by price existed in this level, and here's how important that volume was in what came next. So it's just taking the data that's in front of you and saying, hold on a second, it moved from here to here. How much of that first level of support and resistance was violated before you got a surge in price? And then, we're putting together 3 levels for each of, right now it's the Magnificent Seven stocks. Used to be some biotech stocks that we did, whatever's kind of the movers of the time, or what we're looking for. Just over the years, it could have been tech stocks. It could have been, the internet stuff. Right now it's Magnificent Seven. So I've got 3 levels every morning for Tesla. I've got 3 levels for Meta usually. I've got 3 levels for Microsoft, or for Nvidia, for Apple. And, those are sort of the core stocks that we focus on. If it gets back into those threshold levels and it ticks into them slowly, not a giant wide range bar or something. Now you get a little bit of a consolidation, and then it ticks into them either from above for a short sale or from below for a long. Then we'll take that trade every time. And again, very high probability trade. The statistic suggests you're almost always going to have at least a very high probability of getting through all 3 sets of bands on the first strike into the bands. And then after that, it's a matter of figuring out different patterns into the ranges, or figuring out if new tests of those ranges in there are making sense. Are they setting up for another move? But the first push gets you in, and by the time that's done, it's pretty much the first hour of the day is over and done with. And at that point, for Julie and me, most of what we're doing is setting up the rest of our trades, are New York Stock Exchange trades, and those are set up. Those are automated. Those are just going through. We figure them out the day before. This is the stuff we're teaching all this. So at the boot camp guys are all going through 60 hours of online training and then 4 days of live trading. We do it down in Miami Beach, where we're looking over their shoulder and we're just saying, you putting together a plan for tomorrow. You're not trying to think on the fly. You're not trying to put this together for 10 minutes from now. After the close, you're going to figure out where's price likely to go tomorrow based on what happened today. If the institutions didn't finish what they were doing today, right? If you get into the same price ranges and you start making a push, where can you set them up? And on the NYSE, we don't have to be involved with it. We just set it up as a program trade and let it do its thing.
Actually, people don't want to see setups in practice. They're going to want to see how this works. So you want to tell them how they can find you and connect with you after this podcast?
Sure. So it's traderinsight.com is our website. If they want to take the psychology inventory, it's just traderinsight.com and then /MTRI for Manz Trader Readiness Inventory, MTRI. There's no charge to take that thing. You can also, if you get to the site and you want to dig in deeper, we can give you trials to all of the trading plans and everything, or our alumni room. You can come in and see what we're all doing in there, and it's a different way of trading. So it's calmer, and it's definitely not going to be hyperactive. Here's 500 trades. Let's just grind them out. There's 6 to 7 trades over the course of the day, and that's plenty to keep everybody busy.
Awesome. We'll put those links below. People can definitely check it out and see the good stuff you have there for sure. I appreciate your time here for this interview. It's good stuff for sure. Hopefully people can reach out to you, learn from you, and see what you're doing out there.
Nice talking to you. Thanks for having me.